Let's talk a little bit about Oracle. This is an interesting company. So the company has been around since 1977. That's when it was founded. It was founded by Larry Ellison, who is still with the company. He is the chairman of the board now. He's not in direct operations of the company anymore, but he is the chairman of the board. So the company was one of the leading software companies or providers of its day. It kind of fell out of relevancy, along with IBM, have the same kind of, I guess, industry cycle for both companies. But one of the things that it kind of looks like it might be making a bit of a comeback. So here's an interesting tidbit. So over the last years, 12 months, the stock has returned 43%, which is kind of amazing. And year to date, so 2021, it's returned 34%, which is staggering. You think of a company that is, I guess, legacy or slash over the hill. The company has done amazingly well. The company is really kind of changing their business. So they're moving more away from some of the legacy tech, and they're moving more towards a cloud subscription business. And that segment of the business has been growing by leaps and bounds. And the company operates in the cloud space, and it's best known for Java. And it's also for its software. The company sells cloud engineering services and systems, database management system. This is a quote from the CEO. Oracle is a fully scalable relational database architecture and is often used by global enterprises which manage and process data across wide and local area networks. So the Oracle database kind of has its own network component that allows communication between different businesses. And that's really, it's competing with some of the companies, are monster companies like Salesforce, for example. It's kind of trying to play in that same sandbox with some of those companies. So it'd be interesting to see how all that plays out.
The mention of the wide area network, I mean, that was exactly what the infographic showed, right?
Mm-hmm.
So
yeah, exactly.
To give a sense of like where they're kind of playing in that big and then somewhat in the little.
Yeah. As I was kind of trying to learn about some about the company, the cloud is not something that I'm an expert at. Andrew knows far more about it than I do at this point. And the thing that's kind of interesting about it is it seems to be playing in a bunch of different sandboxes with some pretty big hitters. It has traditionally, I guess, competed a little bit with IBM and Cisco, but it's also now trying to play with some of the companies like Salesforce, Microsoft, Google. And it'll be interesting to see how it can stack up with some of those companies. It's a big company. The market cap for this company is $225 billion. It's not small potatoes, so it's a big company. The company operates in 4 segments. So they have cloud, they have license, they have hardware, and they have services. So hardware is the legacy of the company. They have huge network, and it's sticky. So the network that they have created over the years, it's a sticky business, and trying to rip all that out and replace it in companies, it's not easy. The cloud and the license is really where they're really growing. I think the last I saw, it looked like they were growing around 83% for that segment quarter over quarter. So it's got a lot of growth to come for sure. I guess let's talk a little bit about revenue since we're talking about growth. So revenue growth over the last 3 years has spiked up quite a bit. So as you can see here from the chart, the company was on a pretty good roll prior to COVID. COVID really kind of smacked it in the face and it dropped down quite a bit. But over the last 3 quarters, they've really rebounded and they're surpassed 2019's numbers. And the company expects those to continue going into the future. So the company is projecting about 10% revenue growth over the next 3 or 4 years, which may now sound like a lot, but when you're talking about a $223 billion company, that's not small potatoes. Sure, if a company like Cisco was growing at 10%, 15% a year, that would be monstrously huge. So the company has done well over the last couple of years, barring, excluding COVID. So I guess
tell us about margins.
Oh yeah, let's talk about margins. As a legacy company, as a mature company, is somebody that's been around for 40 some years, the operating margins for the company are awesome. The gross margins, the operating margins, and the net income margins are all fantastic. And the operating margins are really, they help drive the free cash flow of the company. So as you can see from this chart here, if you look at them in comparison to some of their competitors, they're going toe to toe with Microsoft. And this is only over the last 12 months. So if you look at their margins compared to Microsoft's, they're right in the same league. They're beating AWS, they're beating SAP, they're beating IBM, and they're killing Salesforce. And so that's impressive. So it shows that as the company can scale up their revenues, they're going to continue to drive more and more profit to the bottom line and more free cash flow to shareholders for dividends as well as buybacks. So if the company can, I guess, complete this comeback, if you will, air quotes comeback, and do better with the cloud and licensing and kind of switching to more of a subscription-based model, I think it has the potential to be a decent company. And the operating margins over the last 10 years, according to QuickFS, their median has been around 38%. So that's nothing to sneeze at. And for a legacy tech company, that's pretty outstanding. It's right up there with Intel, and it's probably right up there with Cisco. I haven't looked at Cisco in a little bit, but Andrew could probably speak to that a little bit better than I could.
Yeah, it's a bit higher than Cisco. So tell us about the quarter and how they've been doing with cloud and everything.
They've done remarkably well over the last quarter here. Quarterly revenues were up 4% year over year to $9.7 billion. The cloud services and license support revenues were up 6% to $7.4 billion, and cloud license and on-premise license revenues were up 8% for $813 million. So on a GAAP operating income, it was up 7%. Operating margin was 35%. Non-GAAP income was up 4%. So the company has done really well. So the previous chart that Andrew had up, that really shows kind of how the company is really competing against some of the other really big hitters in the cloud market. So Alibaba Cloud, Google, Microsoft, AWS, those are all huge companies. And over the last 5 years, Oracle has moved closer and closer to them as far as the cloud computing and the returns, as well as the revenue margins and all those great numbers. The company has really improved its performance over the last 4 or 5 years since it started making this switch to more of a cloud-based infrastructure and kind of how they're working through things.